Good afternoon. Welcome to the Monetary Policy Stance Press Briefing. Let us welcome the following. Monetary Board Chairman and Bangko Sentral ng Pilipinas Governor Eli M. Remolona Jr. Deputy Governor Zino Ronald R. Abenoja of the Monetary and Economic Sector. And Officer in Charge Dennis D. Lapid of the Monetary Policy Subsector. Governor Remolona will now deliver the statement on the monetary policy decision.
At its policy meeting today, Monetary Board decided to reduce BSP's target reverse repurchase rate by 25 basis points, 5.25%. Interest rates, overnight deposit and lending facilities were adjusted to 4.75%, 5.75%, respectively. The Monetary Board took this action. The outlook for inflation moderated. Inflation forecast for 2025 fell from 2.4% to 1.6%. Meanwhile, forecast for 2026 rose marginally from 3.3% to 3.4%, and for 2027 from 3.2% to 3.3%. Inflation expectations remained well anchored. Monetary Board also noted indications of a deceleration in global economic activity, driven primarily by uncertainty over U.S. trade policy, the conflict in the Middle East. This would lead to slower growth in the Philippines. A rise in oil prices, electricity rate adjustments, higher rice tariffs add to inflationary pressures. Balance, the Monetary Board sees the need for a more accommodative monetary policy stance. Emerging risks to inflation from rising geopolitical tensions and external policy uncertainty require closer monitoring. The Monetary Board will also continue to assess the impact of prior monetary policy adjustments. Going forward, the BSP will safeguard price stability, ensuring monetary policy settings are conducive, sustainable economic growth and employment. Thank you.
Thank you very much, Governor. May we now request Deputy Governor Abenoja to elaborate on the BSP's inflation forecast for 2025 to 2027.
Thank you. Again, good afternoon to our colleagues, including from the media. For this round of monetary policy assessment, as the governor has mentioned earlier, for 2025, we are seeing an average inflation rate of 1.6%. For 2026, it's 3.4%. And for 2027, it's 3.3%. So for 2025, there is some reduction in the outlook in terms of average inflation. And there are primarily three things that have driven this particular outlook. First, we now recognize the slowdown in food inflation, something that we have been observing for the past 4 or 5 months of the year. And we think that it will continue to spill over on the inflation dynamics moving forward. Second, until recently, we have seen oil prices continue to come down. But even with the more recent numbers of oil prices, international oil prices, they continue to be relatively lower than what we were seeing last year. And then finally, we recognize that there could be a moderation in economic activity over the near term. The domestic economy, activity in the domestic economy continued to be firm, but there could be some moderation, and that also was considered in the near-term outlook for 2025. So those are some of the key factors that went into the forecast for the next 3 years. Or maybe for 26 and 27, 2026 and 2027, in general, it's almost the same as in the last round of assessment that we have. Thank you.
Thank you very much, DG Zeno. At this point, we now open the floor to questions. First, we will accommodate questions from our on-site attendees. Then this will be followed by questions we received online or any additional questions. Reminder to our online media friends, please raise your hand and wait for the microphone to be handed to you. Please also state your name and your organization before asking your question. And we are now ready to take your questions. Anyone from this side? Thank you.
Good afternoon, Gov. This is Dirko from Manila Bulletin. Gov, earlier today, the peso fell to a low of 57 pesos and 41 centavos against the US dollar. And the peso has been on a losing streak since at least Friday. Will this prompt the central bank to pause after the easing today? Thank you.
Are developing a playbook for intervention. Usually when the peso depreciates or seems to depreciate for reasons that are really about strong dollar. For example, in the last few days, we saw the dollar strengthen because of global tensions, because of safe haven flows into the dollar. Then to intervene strongly just to maintain the exchange rate of the peso to the dollar would be futile. It would be a bug's game because we won't have enough reserves to do that. So we would intervene just for regular liquidity reasons. At some point, we would have to intervene more seriously if the depreciation continues, because we now find that this thing called the pass-through, which was an old issue, has now come back to haunt us. The pass-through now is very different from before. The pass-through now is about very significant depreciation in the peso. That leads to inflation. But moderate depreciations in the peso, they don't affect our inflation environment. It's when they're big enough, which usually takes a few weeks of continuous depreciation, then we begin to worry. And then we might intervene. But for now, I don't see a reason to intervene.
Thank you, Governor. Any more questions from this side, please?
Good afternoon, Gov. Micah Arceo from the Manila Times. Given the more favorable inflation outlook, since you've trimmed the inflation outlook for this year, are we expecting more rate cuts this year? Thank you.
The key statement is want to be more accommodative. I'll read the exact sentence. The Monetary Board sees the need for a more accommodative monetary policy stance.
Thank
I
you,
think that
Governor.
means the usual maybe 25 basis points next time, maybe. But it will depend on the data.
Thank you, Governor. Any more questions from this side, please?
Good afternoon po. Kieran C. from Business World. Curious if the BSP has taken into account the possible signing of the wage hike and its impact on inflation. Also, if could this be a risk moving forward? Thank you.
A rate hike would be possible if inflation concerns become much more serious than it is. But for now, we don't see that on the horizon.
Thank you, Governor. Any
Wage
more
hike. The wage hike is is dead in the water. I think. So it hasn't been considered as a significant risk.
Thank you, Gov. Any more questions?
Gov, good afternoon. Mika of
Good afternoon.
Reuters. Gov, can you expound on this particular sentence on uncertainty over U.S. trade policy and the conflict in the Middle East? How big of a risk, for example, are oil prices in your in factoring the way forward in terms of monetary policy? What's the current assumption that you have now on benchmark oil prices compared to, say, the last monetary policy meeting in April?
I think it was considered a risk. Oil prices are going to be higher than we thought, but I'll let Zeno give you the numbers.
Thank you, Gov. Any more questions? We received one from Mr. Michael Ricafort of RCBC. Mr. Ricafort is asking, how would the higher global crude oil prices due to the Israel-Iran war affect the BSP's inflation estimates? What would be the additional increase on inflation estimates, if any, that could be directly attributed to higher or more volatile global crude oil prices?
Thank you for the question. I think this was also the previous question. In terms of the peso dollar rate, we have incorporated the latest developments in the international oil markets. Last month, we were looking at Dubai crude oil prices, the spot prices. We're hovering at around 61 up to 64 dollars to a barrel. But in recent days, since Friday last week, we have seen an increase in Dubai crude oil prices, not only in the spot market, but also in the futures prices. And we have incorporated these developments in the inflation forecast that we have announced earlier. But right now, the assumed Dubai crude oil prices for 2025 is about $71 per barrel. For the next 2 years, 2026 and 2027, it's about $68, $69 per barrel. So we continue to see, although in recent days there have been increases in the spot rate, overall, the possible increase in production of oil coming from OPEC plus countries, as well as the still muted demand from the global economy, could help stabilize oil prices below the highs that we have seen in the past year. So this is something that we have incorporated, as I said, in the forecast. But as stated in the press statement, the Monetary Board is very vigilant, and they have identified as the episodes or possible episodes of a further rise in oil prices as something that could add inflationary pressures moving forward. So we are looking at the developments in the Middle East as well as their impact on the inflation outlook. Thank you again for the question.
Thank you, DG Zeno. We have a question from the floor.
Good afternoon, Ditas Lopez from Bloomberg News. Gabay, I understand that the Middle East crisis will result in slower economic growth for the Philippines, and at the same time, the higher oil prices will spur inflation. How do you balance the need to stimulate the economy and control the increases in commodity prices? And between growth and inflation, what will you be more leaning to? Thank you.
How do we balance the different factors? With difficulty. We have long discussions. Say on the one hand, and on the other hand, then we look at all the numbers, judgment.
Thank you, Governor. Follow-up question?
By the way, we are an inflation targeting central banks. Inflation remains number one.
Which remains.
Number one.
Thank you, Gov.
Thank you. Any more questions?
Gov, last month in our press chat, you mentioned that you're looking at 2 more rate cuts for the year. We now have 1, so we have 3 remaining meetings for the rest of the year. We're curious about the timing of the next cut. 1, is it still the case that you are looking for well, at least an additional rate cut, or do you have room for probably at least 2 more for the rest of the year? And if it could come as early as August, or would you likely delay the next easing to probably towards the latter part of the year or towards December in the fourth quarter?
And so as you said, we have 3 more policy meetings. We have August and we have October, December. If things remain on track, then we'll probably cut once more. Depending on the data, we may cut twice more. Depending on the data, we may not cut at all. But for now, if things remain on track, as I said, isa pang 25 basis points.
Thank you, Governor. Any more questions? Let's proceed to another question from Mr. Ricafort. Would the previous narrowest spread between the BSP and Fed rates at 75 basis points become narrower going forward?
Well, the market thinks the Fed will cut in September. Market thinks it will be 25 basis points. And the market thinks it will be beyond September, 1 more cut, so 50 basis points. So if we cut in August, don't cut anymore. Be about the same. Starting from today. We have 25%, 25 basis points today. So both of us will be 50 basis points from today. But let me say that the differential between our policy rate and the Fed's policy rate, only one factor, exchange rate. In terms of the policy rates, you guys and the market set relative hawkishness and relative dovishness. Our policy versus them. This mic is better. So it's relative. You may remember, we used to worry about 100 basis points between our policy rate and the Fed's policy rate. We worry a little bit about that still, but it's now more about relative dovishness.
Thank you, Governor. Any more questions?
Just out of curiosity, because you mentioned that things remain on track in terms of another 25 basis points cut. But if you look at the geopolitical situation around the world, particularly in the Middle East, things to be escalating between Iran and Israel, and it could impact both on oil prices and remittances, as well as if it expands into a regional conflict, given the concentration of our OFWs. How big of a concern is it for the BSP? Are you not too worried about the political the implications of it, given that you mentioned that we remain on track, just your view on it?
That's a very good question. Uncertainty is a big deal today. We have changed the way we discuss monetary policy, we used to blend risks together because we used to be able to assign probabilities to the different risks. So what's the probability of this thing happening and what's the probability? Now it's very hard to assign probabilities. It's a very broad kind of uncertainty. So we've decided we will discuss things in terms of scenarios. We look at the big risks and then we discuss the individual risks separately. And then so they don't get blended into one fund chart. They get their own scenarios. Each risk gets its own scenario. And so that's how the discussion goes. So the discussion is very different.
Just sort of a follow-up, Gov, because in past monetary policy announcements, so we see the fund chart as you mentioned. So what does the chart now look like? What are the risks that you have incorporated into probably the main fund chart in your assessment, and which particular risks have a higher weight in the outlook?
No more fun charts. So we have a projection for one scenario, and then we have another projection for a different scenario.
Maybe just to quickly add to what the governor has said, in previous press conferences, we used to announce two sets of forecasts. One is called the baseline forecast, and the other one is a risk-adjusted forecast. And the risk-adjusted forecast, something that is attached to a fund chart that we used to show. But as you may have noticed, we just announced one set of updated forecast. We call this now a central forecast. And this is what the governor has said, that some of the high probability factors that we think will influence moving forward is now included in this particular central forecast. And then the other types of factors are some things that we do a scenario analysis to supplement the central forecast. So the forecast that we have right now includes, for example, the updates on the oil price, as I have mentioned, the set of external variables, including what the Fed has announced and how the market reads Fed rates will evolve moving forward. It also includes some of the potential adjustments in electricity rates moving forward. So these are some of the things that we mentioned before in the risk matrix, but some of them are attributed to be high probability events, and they're now included in this central forecast. Then we have scenarios, as the governor has mentioned, to supplement the discussions on the inflation outlook.
Just a clarification on that, a central forecast. So are we doing away with the baseline forecast, risk-adjusted forecast, and we're just calling it central forecasts? We're not making any differentiation between baseline, risk-adjusted, just so we could properly report it.
We have a central forecast,
Yeah.
and that would include risks, but risks that we kind of understand, and they tend to be the smaller risks.
Okay.
So the bigger risks, for which we don't really know the probabilities, they're part of a separate discussion. They're part of a different scenario, and then we discuss how likely that scenario is. So you won't see any more fund charts, at least for the next few meetings.
So go for ease of reporting. We can just call it inflation forecast. That's okay. Okay, thank you.
Thank you, Governor. Any more questions?
The BSP has done a lot in terms of developing the market. So you've done some measures to allow more free flow of capital. In case we're talking about uncertainties. In case there is pressure on the peso, will the BSP consider what do you call this? I can't find the word. Going back to some tightening of FX measures. Thank you.
I think, well, first of all, deepening the markets turns out to be harder than I thought. We have very complicated rules. But going back to capital controls, it would have to be something really extreme. I think we've made progress now with liberalizing the foreign exchange market. It's been very helpful, I think. And so to go back to the 1970s or 1980s, I hope not. I really hope not.
Thank you, Governor. Any more questions?
Just on the easing, the accommodative stance that you're seeing. So is there a floor that you're looking at in terms of a policy rate going forward?
Floor. In theory, there's a floor. It's called zero. And for other countries, that's been a big issue. They have what's called the zero lower bound. It hasn't been an issue for us. It hasn't been an issue for us. So I think we don't have to worry about the zero lower bound.
Thank you, Gov. Any more questions? Right, I see no raised hands. We can have the last question from our online participant. This is from Mr. Sanjay Mathur from ANZ. This is a follow-up question on the rate differentials. Do you feel that rate differentials with the US have become less important for the peso in a weaker USD environment?
The question is whether the differential between policy rates is still important for the exchange rate.
Yes. Is it less important for the peso in a weaker dollar environment?
In a weaker dollar environment, well, let me say, so we had this weak dollar environment in the last few months until very recently. That has helped keep our inflation rate down because we didn't get this pass-through that we used to get. In that sense, it's allowed us to not to raise our policy rate. It gave us more room for lowering our policy rate.
Thank you, Governor. And if there are no more questions, we would like to thank everyone for their time and attention this afternoon, including those watching us live on Facebook. Maraming salamat po.
Thank you.
Thank you.